Welcome back CTKS students and elite service members. In this video we'll do a quick check through the news and see what's cooking. There's undoubtedly a lot happening in financial markets. But first, a bit of housekeeping. For the service members, the invite-only scripts, guess what? TradingView has screwed things up. It's not allowing me to change the month on these indicators. Now that's a bit of a problem, but I've got a way around it. Last month the background for the indicators was blue. This current month is green. I'll show you what's been released so far. You can see that all the things in green, all of these indicators have been released. The only things that haven't been released and will be released later on in the next 24 hours are these things: Apple, Nvidia, and strategy. One thing, I've just updated the upper boundary on the euro dollar. That has been going nuts. Please refer to yesterday's video if you're having difficulty updating these indicators. That said, let's get into it and let's run the numbers. Before we read the news, I want to show you just row 1 and row 2 of the cheat sheet. We can see that over the past couple of days the VIX has spiked, retraced, spiked again and retraced. The DXY, the US dollar currency index, has been just coming down like a brick. Dollar yen, bit spiky, coming down. And the 2-year going up, the 10-year going up, oil coming down. When looking at row 2, we can see junk bonds has been decaying recently. Gold decayed, then started to kick up. Silver decayed, then started to kick up. The euro has gone absolutely unequivocally nuts. There's no other way of saying it. The Aussie dollar coming up and copper putting in a god candle. A key to understand is that all markets and charts therefore are intercorrelated and interconnected. We can see this blue line, this is Bitcoin, this is the S&P 500 futures. You know that the VIX was coming down, the dollar was absolutely tanking. This is putting upward pressure on the major indices. And we can see the futures in the S&P 500, they're coming up. NASDAQ coming up, Dow coming up, Russell coming up. Now what is Bitcoin doing? It's following that directional correlation, directional momentum. But at least now you know why. Zooming out, on the daily basis, we nearly got across those moving averages and then we plummeted down to the 200-day on Bitcoin. And what have we been doing since then? We've been testing it and testing it again. And as the S&P 500, the major market indices are moving up, that's giving fuel to the fire for Bitcoin and the entirety of the crypto market to move up as well. We're getting a fair degree of follow through in Bitcoin and therefore inside the crypto market at the current time. We're going to go through the charts before we read the news. Typically people read the news and just press buy or sell based on that. We're not going to do that. We're going to do it the opposite way around. What we can see here, in the previous 24 hours, Bitcoin came through a level of structural overhead resistance at 87,858. Came through another structural level at 89,610, but couldn't get above the 90,922 mark. Then what did it do? It came back, retested. This is price moving in a wave between structural levels. You must know where the structure is, because after you go on a rampant binger, guess what? You got to sleep it off. And we also saw on total crypto market cap coming up through a variety of different structural levels and then getting stopped out and then retracing backwards. A lot of people would say, how can we get to $2.93 trillion and then just lose all of that money only to regain it again? This is the process of digestion. After a really good meal, prices have to sit it out for just a while to get their appetite back. Masterclass members and CTKS students, please let me know what rule is just applying through here and here. Let's have a quick look through the liquidation heat map. We can see at 91,250 there's an overhead level of structural Potential liquidation occurring there. Okay, 91,200 and down at 86,300. Let's look at the 48 hour. This is the way that you need to do it. You need to look through all of them. So many social influencers will just pick out one particular time frame that suits their narrative. Well, that's great for them, but it's not great for you. You need to know all of it. And after all, if you're putting in the hard work to earn the money, the very least you could do is put in the hard work to keep it. And you'll find that across life, keeping the money is far more important than making it. Shock horror, it is absolutely true. Okay, we can see if we start to really get going and we take out that 95, there's a lot of liquidations up to the 100,000 mark. There's a lot of liquidity, and that's only on the 2-week time frame. At the 100,000, not too bad, but don't forget down at the 72,000, it's there as well. A lot of people say, oh Ken, I just want one direction. Well, you might like the group, but it doesn't apply inside financial markets. Price is always moving in a wave. Check out this guy, up and then down and up. Ooh, that's a wave. Up and down, you'll see it all the time. That's what you must be aware of. What about the 6 month? Okay, mainly negative liquidity available there. What about on the 12 month? Yeah, it's all just hovering down here at 46,000. Now, does it mean we're going to come down to 46? Well, not really likely. I have literally seen cases, also on the lower time frames, when there was virtually no liquidity in existence whatsoever, and price just ramped up and ramped up and ramped up. You must be aware of this. This is just a guide. Don't treat it as a law. It is not. Structure is the law. And it's always helpful to remember rule number 4. Price moves in waves. Price is always moving in a wave. It's always going up and down, up and down. The up only or down only scenarios are, may I say, naive. How are the upper banks and lower banks going? We saw the Bitcoin Cash was on the upper bank, and boy oh boy did it continue. It just had a rollicking heap of fun. ADA was also upper bank, and that kept on going. Right now, Ethereum Classic is going upper bank, and boy, that is having a bit of fun. Now, what is lower bank with Litecoin, Pepe, Bonk, SHIB, and BNB? It's wildly important to know what's happening with the row 1s and row 2s. And inside the service, what's actually released are the structural levels. There was an update to the upper boundary of the euro dollar. The euro has been melting up. Melt-ups or non-normalized price action generally refer to panic inside the market, either panic one way or panic the other way. Having been inside financial markets for nearly 4 decades, one of the things to note is these big panic moves up are often traps, and also the big panic moves down are often traps as well. They tend to reflect, so please be aware of this. Understanding structure is realistically a superpower. You could look at a chart like this, which is of course Solana, and you could say, oh, I don't really quite know where the structure is. It is there. It is undoubtedly there. And for the service members, the release of the Solana indicator happened some time ago. One of the things that you need to be aware of when you have really thick structure around a specific level, it's very hard to overcome, and it may decline and decay backwards. That's what happened at that 146.83 mark. We did nearly get up to the 149.87, but it just didn't hold. We had a structural decay and a structural failure. Fortunately, we had so many levels of structure under the 139.49 price that the buyers came in and supported price. One of the things that people tend to do when they're first getting into structure, they think that structure is literally a brick wall. It's like a safety net. It's elastic. It can go up, get pushed through, and come down, but you must know where they are. Intercorrelation and interdependence are wildly important. If Bitcoin is coming up, Solana will get through this 146.83 and go higher. If Bitcoin starts to decay, Solana will revisit the 138.17 mark. Therefore, the chart to look at when you're looking at Solana is not Solana, it's Bitcoin. And if you're looking at Bitcoin, you need to look at total. And if you're looking at Bitcoin and total, you need to look at the stock market. It's all intercorrelated and interconnected, as CTKS students know very, very well. Structure also helps you to understand how significant particular price action is and where price action can actually reverse from. When we look at the DXY, we can see these levels of structure were really important around that 104.9976. As it came down, it came through structural levels and decayed. But what's happening underneath here? An absolute bucket of structural support. Now, what does that mean? The overplay to the downside in the DXY may soon realistically be over. You would have no clue of this if you didn't look at structure. The other thing, when it comes to looking at the news, just be very, very careful. You'll get particular headlines that say that X caused Y. That's not necessarily the case. Sometimes it is, and most of the times it's not. Also, retail look at moving averages, Bollinger Bands, and they're all statistical measures based around on average variability. Now, the problem with that is that financial markets have become exponentially volatile, not normally volatile. This has huge implications for moving averages. They're still good in order to understand what could be happening and what retail is looking at, but structure is everything. Just something to help with this a little bit. Tesla stock sinks 26% in the wake of Elon Musk's Nazi salute at a Trump rally. Okay, let's have a look at this. So this is saying that only Tesla came down. What happened with the main market? It came down. When the main market comes down, everything comes down. When it goes up, everything goes up. If this occurred during this period, it would be the opposite. Just be aware, you've got to be careful of news headlines. They create causal links which may or may not be correct. Therefore, you must stack probabilities. Looking at the front page of the Wall Street Journal, we can see some pretty interesting headlines appearing. Stocks end sharply higher on auto tariff reprieve. Now, if you took this literally, you would say every time a tariff reprieve happens, the stock market will go up. I wouldn't rely on that as an investing or trading based decision-making system. So please just give an understanding that a specific news headline doesn't mean that it will continue into the future. A lot of people say that you can't time the market. This is because they try to time the market through reading news headlines. The thing to understand, smart money always profits first and then feeds the news headlines out to the mainstream media press. And typically, the press will go very, very negative just before things turn around. This is mainly because mainstream media news is pretty much directed at retail. Retail have very low financial literacy and they don't know how to read charts structurally and do not know how to assess interdependence and intercorrelation. Therefore, they get slaughtered each and every day. We always say we read the news but keep one eye closed and half of our brain turned off, because it's typically fear-based. The question is, should you read the news? Absolutely, it's good for a joke, but just remember that the charts are telling you everything up front, and smart money always profits first. Smart money makes the news. It doesn't read it. Returning to row 1 of the cheat sheet, we saw that the VIX, the fear gauge of the main market, came down, and it came down relatively hard, and that caused a spiking up of the major stock market indices. A lot of people are always asking the question, why did this happen? Why did this happen? Because they want certainty. The why it happened is unimportant. In many respects, financial markets are far too complex to just boil things down to one simple thing. Oh, it's auto tariffs. It is not. It is so many different things. It can be part of it, but it's not all of it. Therefore, people get into the quandary of like, oh my God, where's it going? Is it going up? Is it going down? It's always moving in a wave. It's going up and it's going down, and you can use that to your advantage. Until you get used to the wavy nature of price, you cannot succeed in financial markets. And to understand the wavy nature of price, when you come through a structural resistance area, that will start to slow price down. And when it reverses around, if it can't retest and find support, it's going to the level below. And if it finds support there, it's going to the level above. It is really, really quite simple. And this stuff is real time, my friends. This is not delayed. This is not cherry picked. We do this each and every day. So what you need to look out for is this 90,922 on Bitcoin and the 89,610 mark. Bitcoin is currently 90,386. If you've ever heard the term price discovery, that is a retail thing. Price discovery never ever exists in actuality. So what we can see here with total crypto market cap, it's being supported at the current time. It has structural support below it. It needs to overcome the $2.93 trillion structural resistance level. If it gets above that, we would expect continuation. If we start to drop below here, and especially below that 2.88 trillion, we're going to come back to the base. Remember, price is always moving in a wave. Maybe someone who says, oh, it's going to go up, and during this period you were there and it did go up, and then it comes down and retraces all of that move. This is how structure works. You must know where the structure is. It does take time to be able to read structure effectively, so if you're just getting started, just be kind to yourself. It always takes time. It's like every single learning. And what we can see here when we look across the top categories by market cap, real world assets did really well in the past 24 hours. Specifically, Link did well, Ondo did well, and Algo did well. SEI, not too bad, but taking a breather. Have a great day or night ahead, my friends. And Kate and I look forward to catching up with you again in the next video. Bye for now.